Welcome back to Empowered with Elizabeth Namofsky. We're discussing payday loans and whether they're helpful to their customers. So according to a 2016 Financial Consumer Agency of Canada study, payday loan use had more than doubled in 5 years. Fewer than half understood that payday loans were much more expensive, and 4 in 10 borrowers used a payday loan for basic needs like utility bills. A 2019 Hoyes-Michaelos bankruptcy study showed the average payday loan size is actually growing. 1% of loans were for $2,500 or more in 2011, and this is up to 20% in 2019. Also, nearly 4 in 10 Ontario insolvencies involve payday loans, almost 1 in 2 for people ages 18 to 29. So today I'm joined by Pat Dunwoody, a financial services consultant, Candies Kotchapaw, a founder and executive director of DYLOTT, and Barb Amsden, head of PQbd. All right, Barb, I am going to ask you now, can you give us an example of how payday and other interest loans, high interest loans, can turn from meeting to short-term need to a long-term nightmare?
That's a good question. And I should say to make people feel more comfortable that my husband and I, well before we met, we found out later that we had both inadvertently gotten into debt that we could not pay off right away. So this is an issue that a lot of people struggle with. Now, in terms of laws to protect people from these high interest loans, well, sorry, first to answer your question about first of all, you need a check cashed, and then you're getting paid by check rather than electronically. Then you find that you're needing that money to pay for food, as Candice said. And then you find that you can't pay off, that you need to borrow a little bit extra to get you over the next pay period. And then you find that the interest on the payday loan is higher. And then you find that maximum 2-month loan that you haven't been able to pay off gets rolled over and rolled over, and then it becomes to a high interest loan. Now, I know it sounds kind of complicated, but what I'll tell you about is what are the laws and why aren't there laws protecting us? So first of all, the federal government, there's a law that says you cannot charge more than 60% a year, which is for most of us ridiculously high anyway. That's 2.5 times, major bank credit card rates. And there's an example that Pat's going to give that is really helpful to bring this home to us. I guess Pat can give that example a bit later. Also, federal law lets the provinces regulate payday loan rates. So if it's more than $1,500 and it's for more than the 2-month period, the provinces set something. And they were really worried that people were going to be pushed into the arms of loan sharks. So they had to kind of do something that they, I guess, felt would incent people, the check cashing companies that were the ones that then became payday loan companies, that they would be getting a return for they'd be able to get a return for the work that they're doing. But the amount, if you actually look at it, is ridiculously high. So the highest rate provinces, because every province has some pretty much something different, that highest rate provinces let payday lenders charge up to $17 per $100 for a 2-week loan. And when you first listen to that, you say 17, 100, sounds like 17%. Like, at least I did get some basic math. But in fact, if you have to roll it over for a full year, that $17 per 100 becomes $442 in interest that you're going to have to pay back on top of the $100. That's 442%. If you kind of were balancing, arms, when you're balancing oranges to oranges and comparing apples to apples.
So, Pat, what can be done? What can we do here?
Well, there's a lot of ideas, but I will speak to 2 specifically. And one of the issues is that banks, as you've heard, are regulated federally. The check cashing services and other like services and stores are provincially governed. And then often it's left up to the municipalities to manage the introduction of these stores into the neighborhoods. So now I think we need a coordinated effort at all 3 levels of government and include the community services, the support services that exist, to really be able to make sure that the services that the people need in those communities are there, and not just the companies that are opportunistic. And I think the other major issue that you've heard everybody to date is communication. People don't know what the interest rates are.
Pat,
People don't know.
Hold that thought. We'll be right back after this message.